Hello, guys. Welcome to another episode of the Commerce Lab by Ecomcy, the place where air related to Amazon, FBA, product level, and e-commerce. My name is Vincenzo Toscano, founder and CEO of Ecomcy, and today we bring you for a second time now, Nachman, founder and CEO of ConnectBooks, which I would say is one of the top solutions out there to really help Amazon sellers, automate their accounting. And the reason why I wanted to bring Nachman today is to really discuss, what has been happening overall with Amazon sellers, especially around profitability. What are some of the challenges maybe he's been encountering with some of the clients when it comes to really being, on top of the books? And hopefully you can get some of that insight, guys, to make sure you get the most of what is left for 2025. So, Nakma, pleasure to have you again on the show. How you doing?
I'm doing great, and thank you so much for having me. It's a pleasure to come on again.
Thank you, man. So, if you don't mind, just give a brief introduction about yourself, the companies, for somebody that might not know you, and then we can dive into the topic here.
Sure. So my name is Nachman. I'm the founder and CEO of ConnectBooks. ConnectBooks is an accounting automation tool, which we focus to we help people get a proper set of books. So a lot of times when people want to do the bookkeeping, especially when it comes to e-commerce, it gets very complicated and they have to spend a lot of time going to all the different marketplaces, pulling all the different transactions and plugging it into their QuickBooks or Zero. And the idea really is that we automate that process. Now, what we do differently than most other tools out there is that we automate with clarity. So a lot of times you have people using different tools, or like they have bookkeepers that are doing certain stuff, and then at the end of the month they're like trying to make sense out of their books and like, hey, we're not showing that we're making the right margin that we're making. We thought we're making more money, making less money.
Yeah.
And then the question goes, where is the money? Like what happens differently? So one of the things that ConnectBooks shares very differently, and it's really unique about it, and that was always our vision from the get-go, was to automate with clarity. And just a little background about myself, why I'm so focused on clarity is I myself, ConnectBooks were around since the beginning of 2019. Prior to that, I was a CFO of a large wholesale business, and I'm also an accountant. I do hold a master's degree in accounting. So I've been doing accounting, since, was my first career. Doing it already for like 13 years. And the time where I've worked as a CFO, one of the stuff that were really valuable is, besides providing reports and accuracy to the shareholders and the business owners or the managers, part of the thing always was like, where's the money? Like, okay, so we made money, but where did it go? Or like, if we didn't make money, then the question was, why not? And I was spending a lot of time trying to get to the bottom of it and figure it out. And then what happened was, when I left and I started my own bookkeeping company, which we focus on small to medium-sized businesses. So we run we run a bookkeeping company alongside our platform. But the idea was not just to do bookkeeping, because that I felt like, there's a lot of competition out there, and that's what a lot of people do. For me, it always was, I wanted to have more of an edge. And my edge was, helping people really understand the books, not just doing the books, but really helping them understand it. So our focus was always was to give people clarity from day one. And then, we started, I started my bookkeeping business back in 2017, and then we started to work with e-commerce sellers. And that's when, I realized, this could be a good opportunity to, build out a software, because we can do the same thing, the same service we're going to get from one person, we can do for a lot of people through automation and having the right technology. So that's really where the idea of ConnectBooks came. And the reason why I like to put out my background, and the reason why I like to focus on important, is that a lot of times happens with sellers is that they kind of like, they look for certain tools that are going to they look for certain tools that are going to help them. But the problem is that if you're not an accountant, and it's really hard for somebody who's not an accountant to do a proper bookkeeping.
It's like having a Ferrari but not knowing how to drive.
Yeah, like I, for example, cannot run an Amazon agency because I don't know how to run an Amazon agency. I've never sold on Amazon. I don't know how to run an Amazon, but I have spent so much of my, so much time in the last 7-8 years in doing, automating accounting for Amazon sellers, talking to sellers, understanding what's the problem, understanding where they're going wrong, understanding what they want to see. I actually just got off a call before, an hour and a half. I was having a seller, we were digging through his books, understanding the margin. He's like, I'm trying to understand, how much inventory I have compared to my loans, making sure I'm heading in the right direction. Now, with the proper set of books, you're able to get the proper clarity. So My mission has always been about clarity, and when it comes to automation, the focus was not just, there's something called, they say, garbage in, garbage out. The focus wasn't about just getting the data in there. The focus was to give sellers the right clarity, that they understand every month how well their business is doing. If they're making money, they want to understand where they're making. If they're losing, they want to understand where they're losing. And in that, we have like additional two factors that we go into. One is that we like to focus a lot on SKU profitability. So really, the idea is, I know I'm like jumping a little bit on the time, but I think it's an interesting topic, because this is the way I look at it these days. Is that I always get a question. People ask me, like, if I'm making a product 20% profit, is that a good margin or not? So the answer is no such thing as a good margin. Why? Because if, let's say, you're doing $500,000 in sales, and let's say your profit margin is, let's say you have a 20% margin gross. So your gross margin is $100,000. Now, if you're working out of your basement, that's a very nice margin.
Yeah.
But if you're running a team of 10 people, no, you're in the red, right? So the answer is that in order to tell somebody what the right margin needs to be, it really depends on their overhead. So the first thing that we try to do, and one of the things using automation will help you understand what is your overhead. And now when you understand what your overhead is, you know what your break-even point needs to be. So, for example, let's go back to the previous case. Let's say I do $500,000 in sales. Let's say my overhead is $50,000 a month. So I know if you take your overhead, I know that, let's say when I do let's say 250,000 sales and I make 50,000 profit, then I broke even. When I get a 500, we made $500,000 in profit. We made 50,000 profit. So the idea that we're trying to figure out is like, what is your break-even point? What is the margin that you need to have? Where's the margin that you need to be? And then another thing that we also like a lot to focus on, which is actually almost, I find interesting, that nobody talks about. And the reason I just had to make up my own reason why nobody talks about it, and I decided because it's just very complicated, is inventory age. So what I've seen a lot of sellers lose out a lot of money is that they have inventory that sits around for too long. So the problem is that when you sell a product, you have your, so when you go over your numbers at the end of the month, whether you're looking on a tool like Sellerboard, or whether you're using ConnectBooks, or whether you're losing out your QuickBooks, and you look at the products that sell, the problem is they don't show you the products that don't sell, right? So how much money is buried in inventory that's selling in 3PL? How much money is buried in AWD or in all the other places? We give you a full picture of your whole inventory, but the beautiful thing is that we break it down by how many days it's been laying around, and we also tie in the dollar amount. So, for example, if you have $2 million worth of inventory, I can tell you right away, $1 million of it is laying here more than 120 days. Like, let's say I was talking before with that customer who had $3.5 million worth of inventory, but 1.2 was laying past 4 months. So the question is, why is it here? Now, every other product had a different story, but that kind of data I haven't seen in any other tool. My assumption is just too complicated for other people.
Yeah, I agree. Yeah.
I don't overtime. I got to
No,
give
I
them my
love it. I
best.
love it. I think you dropped so many bombs, and I actually those are some of the things that I want to start, as an opportunity to proceed with some of the questions I had, because some of the things you're mentioning are some of the main reasons why people ask themselves, where is the money going? And I think inventory is one of them. I think people, first of all, they're setting a lot of inventory all the time, but I think even from an accounting perspective, they also don't know how to time when to buy inventory, so they can even be efficient with the taxes and things like that. So I guess, out of curiosity, beyond this situation that you just described with inventory, like, what are some of other things you see sellers doing on a daily basis from an accounting perspective, that essentially justify why they can see profit on paper but they don't see on the bank account? What other things you also see people doing?
So I have a very interesting analysis. I have been in this space since 2019, before COVID started, and COVID hit, and there was a lot of fun in the COVID days. I mean, not fun for people, but fun like on the e-commerce side. A lot of aggregators, and e-commerce was spiked. And I mean, the beginning COVID was like everything came to a standstill, but then everybody realized that everybody's staying home. E-commerce spiked like crazy. A lot of aggregators. There's a lot of things going on during COVID. And what was interesting, what I realized was that there was a lot of people who went into business in COVID times. Some people got laid off and had no choice and just had to open up a business. And Amazon is easy. And recently, we have seen a lot of sellers go out of business. So And the real question I always have is, what do the people who stay in business do differently than the people who don't stay in business? And
Mm.
there's a lot of customers that we have dealt with, that we're dealing with since 2019, before COVID started, through COVID, and even today, with all the tariffs and with all the crazy stuff that are going on today. People having issues with employees, people having issues with tariffs, people having issues with the new fees in Amazon. And
Mm-hmm.
when Amazon says we're not going to increase fee, but just one fee, or like, placement fees I have clients that are paying $300,000-400,000 a month placement fees.
That's crazy.
Like
Yeah.
it's crazy. It's like just shaving 3 to 4 million a year off the
Yeah.
bottom line.
You might as well have your own warehouse at that point.
Not even with our warehouse, meaning Amazon's charging them to truck it to different warehouses. The
No,
inventory
no,
placement,
no, no.
that's
It's
like the
crazy.
most
Yeah.
significant fee that came in the last year. Meaning Amazon upped a lot of fees, but they're not that significant. So what ended up happening is, one thing I've seen one thing very clearly: the people who know the numbers really clear, those are the ones who survive. You know why? Because they always put an emphasis and a focus on being profitable and being cash flow positive. You have to do both. You have to you have to be profitable, but you also have to be cash flow positive. Meaning you can't just buy inventory that lays around. So the people who really like sit and dig down to the numbers, and they want to really understand the bottom line, and they really want to understand, why am I making money, why am I not making money, where am I losing, where can I make more. Those are the people who at the end of the day, work through the hard times, because when times get hard, they understand that they're not making money, so they right away know that they have to pivot, and they're focusing all day on pivoting and making sure they're profitable. Then I've seen certain sellers who like never look at the numbers. So when times are good, like in COVID, like, I mean, I wouldn't say COVID was a good time, but I'm saying times when there was a lot of business for e-commerce sellers.
Yeah.
Yeah. They made a lot of money, but when the economy shifted, they had no clue that the economy shifted. Meaning they can read the news, but they don't understand how it impacts their business because they don't have their numbers. And even when you have your numbers, you have to study it. You have to make sure that you understand it. You have to make sure that you're clear with it. So what happened was, they didn't pivot, and they just continued doing what they're doing, and all of a sudden they found themselves in the red one month. And then at some point they went too low. Usually by the time they try to get a bookkeeper is when it busts. Like,
Yeah, it's too
when
late.
when it's too late. And I can tell you one thing. We have two companies. We have the software, which is an automation, which I'm not really, meaning I'm involved in building the software, but we don't really, usually people have in-house bookkeepers, in-house CFOs, and they do everything themselves. We don't really get involved in their accounting. And then we have also our own bookkeeping company that we do bookkeeping for sellers. So like, if somebody tries to use the tool, it's too complicated, and they like, hey, just do the whole bookkeeping yourself. We manage around 100 Amazon sellers that we do bookkeeping for. And
Nice.
I can just tell you, in the last year, the last like 6 months, we have had like 5, 6 clients shut down. Every single one of them shared one common reason. They hired us as a bookkeeper, and we did their books, but they never paid any interest to understand the numbers. Like, whenever we sent them, there's actually certain clients who I told them, for example, his inventory was off, and every month he was losing, like, he never had a proper inventory tracking system, and we recommended a couple of times to help him set up something, and he couldn't bring himself to do it. And today his business is shut. Why? Because if he was losing like $200,000 every quarter in inventory, and he had no visibility where he's losing it, and he never took the
That's
time to
proactive.
step back and
Yeah.
understand like what's going on. And what we have seen in the last 6 months, I've seen every single one of my clients that shut their business down. I don't, sometimes we have certain clients that call us with questions. Like, you could see when the client calls you with questions, they're trying to understand, they want to know what's going on. And then you have those clients like, okay, I have a bookkeeper, he just does everything for me. It's like, I know I need a bookkeeper, I don't need books, I need my taxes. They're like, kind of like I outsourced it, and just don't bother me, don't talk to me about it again. I wouldn't say all, but all the clients that closed down were clients that never really cared about the numbers.
Yeah, they've sourced all the accounting and everything, and they think that that's something they don't need to touch ever again. And that's,
Yeah.
I agree with you. We also, with clients that we handle from an agency perspective, it's the same. Like, I can't tell you how many times we jump on calls, people doing millions of dollars, and you ask them like, what is your net profit? And they don't know. They don't
I
know
don't know.
what is the how much is going into the bank, and it's like they just hope that at the end of the month it's gonna be enough money to pay employees and then to buy inventory and keep doing it over and over. And some of them, let's be honest, they've been lucky. That's why they're not going on. They're lucky
Yeah, but
that the
luck is
numbers
not
work out.
forever.
Yeah, exactly.
Luck is
Yeah,
not forever. I
yeah.
remember once I asked somebody when it comes to hiring employees, I'm like, so hiring employees is a trade on its own, but one of the things is you want to have like a good framework. So
Mhm.
I was telling the guy, I said, look, I have good employees, I do it based on my gut feeling. Why do I need this whole framework? He's like, look, your gut feeling worked for you maybe once, worked for you twice, it might work for you another 5 times. But when it doesn't work for you, you have no way to understand how to do it better. If you have a
Mhm.
framework of like, what is your core values? What are you looking for? What's the mission that needs to be accomplished? What type of employee do you need in your business that you should be successful? Then when you hire somebody and it doesn't work out, you kind of go back to your framework and you say, hey, what did I mess up? What did this person not have or did have that's not part of the framework? And then you tweak it and better. And the goal is after a couple of times, you should have a solid framework and you should be able to, hire the right people.
Yeah. And I guess from a proactive point of view, given that we mentioned that a couple of times already, like what is something sellers, maybe from a routine point of view, can come up with to avoid this? Like, do you recommend on a monthly basis to check any specific KPI, have a certain methodology to cross check? Like, what is something that high level could be a basic that could allow you to avoid this kind of build up
So
to a potential
we
situation that cannot be fixed? Mhm.
so we actually work with a certain customer where we help them out on the bookkeeping side as well. And actually, we don't really even get in calls on a monthly basis. I mean, in the beginning, we got on like quite a few calls, and then we put our KPIs in place. Every month, we send them his profit and loss and his balance sheet, but in the email, we have a summary of the KPIs. And as long as we hit the KPIs, we know we're good. So our first KPIs, we have to. So we basically I broke it down before and a little fast, but you want to know what your overhead is, so make sure you hit your break-even point. So I'm gonna let's say for example, he does $1 million a month in sales, and they have let's say a 25% gross margin, so they have 250,000 in profit, and let's say the overhead is 100,000. So we went over the overhead once with them, and we confirmed that the overhead is good. There's not much what you can cut. They got a pretty lean overhead. So what we do every month is they're happy making $150,000 a month, and the owners have a lot of other stuff that they do besides Amazon, so they don't want to be really too involved. So every month they get their report. A, they have to make sure the sales are in the range of $1 million. B, they want to make sure that their margin is still 25% gross margin, and C, they want to make sure that their overhead is not more than $100,000. So if we see one of these three stuff out of the ordinary, then we bring
You
the
take
right away to
action.
there.
Yeah. Yeah,
There's
it's
one other
actually
thing.
having a KPI. Like I guess that's actually a good point. Like most people don't know what is the I guess the benchmark they have to sit in terms of revenue, profit, and everything. They just go with gut feeling, as you mentioned, and it's kind of gambling at some point. Yeah,
You bet. Oh, you bet.
yeah.
It's like Warren Buffett said once. You know what makes him a good investor? He's like, my job is to analyze the stock market and analyze businesses, and based on my analyzation, that's the stock I'm going to buy.
Yeah.
Some, what happened is in the last couple of years, a lot of times the stock market doesn't reflect the actual economy. Even today, I mean, the economy is horrible, but like a lot of stuff don't really reflect. I mean,
Yeah, it's temporal.
The video hit $5 trillion.
That's
It's
crazy.
crazy. It's
Yeah.
crazy. I don't know what
Yeah.
it's based on, but
Yeah.
like I've gone over to certain people, and I've asked them like, so one of the things is because all the new technology, let's say like Robinhood. Robinhood has enabled a ton of young people to buy stocks. Back in the days, like when you wanted to buy a stock, you went to a broker, you had a conversation with him and or her, and you discuss your strategy and what you want to buy. Today,
Yeah.
since it's so easy to buy and sell stocks, people are just buying right and left, basically no clue what they're doing. They're kind of like
Mhm.
just hype. And that's really a big part of why the stock market is not really properly reflecting the economy. But one of the things
Yeah.
would be is, let's say, for example, if you buy a stock, how many times earnings are you trading? Most people don't even know what
Mhm.
that means. When you ask them, like when you look at stock. So Warren Buffett says is that my job is to analyze the stock, and that's what I do all day, and that's why I'm so good at buying the right stock and having the right stock. And I think Warren Buffett's like one of the only funds who always beat the S&P 100, S&P 500 every single year.
Yeah.
But
Yeah.
other people like that have no clue what they're doing, and they just like randomly buy stuff, and then they end up losing all their money. So sometimes it works and sometimes it doesn't. Like one of the biggest stuff where I remember even I lost some money in the beginning. Like I didn't pay too much attention. But let's say when Tesla skyrocketed back in COVID, like in 2019, Tesla went crazy. And a lot of people, even I didn't buy a Tesla then. And we felt like we lost out. So all of a sudden Rivian came up. And everybody went crazy to buy Rivian. And I know Rivian at one point was trading at $150. Now it's like $13. Like there's so many different, like you have to really know what you're doing. A ton of people lost a ton of money in there. Like, and these are a bunch of other stocks. A lot of people lost some money, but it goes back to the same thing with just not having visibility. It's the same concept, and the same concept with Amazon. Same concept with your products. You have to have proper visibility on your products. And it was interesting. I'll just share another thing, which actually was working with a client recently. He wasn't making money, so he came to me. He's like, I don't know what's going on in my business, but based on the numbers, I should be pulling out like $100,000 a month, and like there's nothing there. So we sat down, we set him up and whatever. And then we went over, we had a call with him. So it turns out he was actually selling at Walmart. So he buys a product, let's say for $10. And he, let's say, wants to sell it for $30. So he says, okay, commission and fulfillment fees, let's say $10. And then advertising, let's say, is 10%. That's what he decided. So then from 30, I should be down to 17 minus my cost of the product. So I should have $7 profit. And then he was looking at an ROI. So if I spend $10 and I make $7, I'm a 70% ROI. The problem was there was a bunch of other fees that he was missing. He, for example, first of all, his ads were not 10%. So his problem was that across the board, his ads were 10%. But in a lot of SKUs, especially newer SKUs that he was starting, they were nowhere close to 10%.
Burning money.
Yeah. I said, you know why your tacos is 10%? Is because, let's say, this product, he had a certain product that was doing very well, or he wanted to just liquidate and he lowered the price and he did a ton of sales, but zero ads.
And the camouflage.
So you can't just look at the bottom number and say it's 10%. I said, number one, ads is 20%. I said, now what happened with returns? You completely forgot about returns. He's like, all right, yeah, some come back. I said, on average, you have a 10% return rate. So 10%. So if you have to leave, you have to have 10% of the profit going to garbage. I said, what happened with your storage fees? What happened with removal fees? What happens with the inventory? I said, there's so many other fees that you're just not accounting for. So we basically redid the formula for him. And we told him, now, when you source products, this is the new number you're supposed to look at. And if you can't hit profitability after going through all my margins, then just don't buy it.
Yeah. I know. That's such a good example. I think that's the perfect analogy to show that even in sometimes you think the numbers on the screen you're pulling a profit, you need to go deeper and really understand what is happening, because without that you cannot even predict what you're going to be doing in the future. Like we're pretty much at the end of the year, and a lot of people need to be thinking what they're going to do in 2026 by you sometimes making assumptions on things such as that you're profitable and you're not. It can definitely kill the business. So I guess, Nachman, to close today's episode, like what would be your last advice, maybe for the remainder of the year, like what you should advise people to look into or be careful to avoid having a bad Q4 and make sure they can set for success in 2026?
I have a very good piece of advice to share. So I was working with a client, and it's interesting. So some people make money in Q4 and they make money all year. But that kind of business model is dwindling because Amazon's not more the gold rush that it used to be back in the days. I mean, if I can say so. But some people used to just make money December, not make a whole year. Most people today try to make money every single month. They try to pull in a through profit. So I actually have a client that does not make money in December. So they're in a certain industry which doesn't spike in the holiday season. So since it doesn't spike, they're not really making money in December. But throughout the year, they've been making money. Now, actually, with that client, it was an interesting story that we actually helped them take their business from a loss into a profit, and they've been cash flow positive. And one of the reasons is they were from one of those clients who never looked at their numbers. And then they were complaining to us once that they're losing so much money. I said, let's just have a phone call. And I started telling them, by the way, do you know that based on your overhead, anything under 20%, you're losing money on? I said, you were? He's like, what do you mean? And then another factor, he never calculated properly landed cost. That's because he never provided us proper documentation of how much is where, how much the containers are costing and all that. He used to think he's making money on certain products, but when he factored in the landed cost, and that was before the tariffs went in, he was actually losing money. So, he actually came to a very good standpoint throughout the year. He's very profitable, but then he wanted to make sure that in Q4 he's also profitable. So why is he not profitable in Q4? Because his storage fees is around like $20,000 a month. But if you're going to take the storage fees from, let's say, like a month of July and a month of December and compare the two, you'll see that Q4 is 3 times the price. I don't know what the rate is, but from my analysis, the Q4, the storage fee is 3 times. So basically, he has, and let's say in July, at 20,000 storage fee, and December he had 60,000 storage fee. So that $40,000 ate up his profit. So now what we're trying to do is trying to see how can we minimize it. So we have a very lean inventory in Q4. We're really on top of it. So we want to try to bring down the storage fee as much as possible. Then we actually did a very good, this I did like as a, because we also working on their bookkeeping, it's different. But we also, what I did for them was a different report was, we took a list of all the products that were still in stock, and we looked what would be the potential profit. So how do we calculate? We took the profit per SKU after all the fees included for the last 3 months, came up with an average profit for the SKU. Then we took out the storage fee and tripled it 3 times. So now we know how much profit we're going to make on this product in the next 3 months. And then we looked, okay, so based on now that we accounted the proper storage fees, how much money are we going to make from these products? So certain products had no way of making money through Q4 based on the amount it sold. Oh, so we did nothing. We looked how much sold, and we looked also how much is left in stock. So certain products, like for example, that weren't making money, you didn't send them more, but a lot of them were still in stock. So what we did is we looked on what our potential profit is. We made a bunch of removal orders. Now, certain products do make enough money that he was able to eat the Q4 storage fees. But then there's certain products that don't. So what we're trying to do, the products that really don't make, so then we have to look into another problem is the ranks. If you have a good rank, you don't want to lose it. So really the best way would be is for him to go on vacation for Q4, to shut the Amazon store, go on vacation for 3 months and come back. The problem was, and technically if he could do it, he can afford it because they made enough money in the first 9 months to pay for the last 3 months. The problem is that the last 3 months they lose money. They lose. So what we're trying to do is really the reason why we can't shut the store for 3 months is because we're going to lose the rank. So so the products that he planned on discontinuing, we right away made removal orders. Like right away got them out of FBA because the Q4 would have killed you. The next thing we did is understanding the margins of each product and then trying to minimize the storage amount and then trying to bring the price. So he should at least like the next 2 months, like just mainly break even. So really one of the things that we took a lot out is that Q4 storage fee is 3 times the amount. And then what you have to do is go through your product and factor which ones can survive Q4, which one will make money in Q4. And then the ones that don't make money, if it's like a private label item that you're going to be selling throughout the year, you might have to eat the loss to keep the rank because that's tricky. But if it's not, get it out of there as fast as you can.
Yeah, I love that. I think at the end of the day, I mean, the main takeaway of everything you just described, which is something I'm sure a lot of people is going through, is like sit down, know your number, guys. I think Q4 is also a moment to reflect, especially getting into Q4. And I'm sure, like, if you do the right revision, as Nachman is mentioning, like you can really set yourself for success. So it's been a pleasure to have you in the show for a second time. Thank you for dropping all the knowledge as usual. So I guess for people that want to, work with you or give it a try to the software, tell us more about that so I can put it down below.
Yeah. So the best is just visit our website, connectbooks.com, and just book a demo. And, we'll have one of our reps get on a call and answer all your questions. And we'll tell you what's the best you can do. And then we wish everybody to have a great Q4 and they should have a good season. And one more tip is just be careful with all the lightning deals and coupons you put on Black Friday with Cyber Monday, because a lot of times I've seen where people, let's say, I had another client, he was selling a product for $80 and he made $20 profit after all fees. But then he went and put a $10 coupon. Now, sometimes when you have so much money coming in and out of your account, you think like $10 is nothing. So if a product's selling for $80, big deal, I'll sell for 70. But I told him, you slashed your margin in half when you put down $10 coupon. So just be careful. I've seen many people on Black Friday make double the sales, but half the profit from a regular day. Now, if you got to move inventory, then do it. But if you don't have to move inventory, then just be careful.
Yeah, I think that's super important. Sometimes people get so fixated on making as much revenue as possible, but what is the point of that if you can put money on your pocket, right? So good one.
Yep.
Thank you, man. So it's been a pleasure. Thank you so much, and looking forward to having you on the next one for sure in the future. Yeah, been a pleasure. Thank you.
Thank you so much.
Thank you. Bye bye.